Good day, great 12 learners. Welcome to today's business studies lesson. My name is Sidi Sotlaka, and today we'll be looking into investment securities, focusing on forms of investment. Now, did you know investors make more money than bosses who run the business on a daily basis? So this is to say, if you happen to want to be an investor, you are basically making the right choice. Because when you're looking into investors, these are people who just use money, put it into the company, and make the money to work for them. But bosses are the individuals who will be running the company on a day-to-day basis. These are your CEOs, these are your board of directors. So you should make that wise decision. In future, become the investor, not the boss. Now, lesson objectives. This is what we should know by the end of this lesson. So by the end of this lesson, you should be able to analyze the impact of the following forms of investment. Your investment would include your government retail savings bond, your unit trust, your shares, together with fixed deposit. You should further be able to explain the different types of shares and also outline the rights of ordinary shares and preference shareholders, together with distinguishing between ordinary and preference shares, then discussing the types of preference shares. Then, at the end of this lesson, you should further be able to define the meaning of dividends, capital gain, simple interest, and compound interest. You should also be able to differentiate between simple interest and compound interest, and also conclude our lesson by calculating simple and compound interest from a given scenario. Now, this is our concept map. This is how our lesson is going to be structured. We'll start by looking into the forms of investment, then look into types of shares, and we will be considering the rights of ordinary and preference shareholders, and also differentiate between ordinary and preference shares, and then look into types of preference shares. Then we should also look into the meaning of dividends and capital gain, then move now into differences between simple and compound interest, then calculate your simple and compound interest. Then, pre-knowledge, you must know that financial function focuses on ensuring that businesses are able to use money according to the budget, and they find ways of increasing the profits of the business through passive income, which would happen via the investment. Then, pre-knowledge practice, this is a multiple choice question now. The multiple choice question is read in the following way. The function deals with the increasing, function deals with increasing the cash flow of the business through helping the business to have passive income. Is it the production function? Is it the marketing? Is it the financial? Or is it the accounting function? So it cannot be the production because this deals with making the product. And it cannot be marketing because it deals with making customers aware of the product being sold by the business. But it can only be the financial function because it deals with keeping the business into the budget, making sure that they get the right interest from the financial institutions. It cannot be accounting because part of finance is to do accounting. Then, new words and language. The term shares. This is given to investors, or it gives investors an opportunity to obtain part of ownership of a company. So for one to be an owner of a company, they need to buy shares. Dividends refers to a sum of money paid regularly by a company to its shareholders from its profit, which we consider to be return when you invest in a company. Then ordinary share refers to now shares which have no special feature, and we'll discuss that during a lesson. Then preference shares refers to shares which are entitled, or refers to shares that entitle the holder to a fixed dividend or payment of these dividends, and it takes priority over that of the ordinary share dividends. As we continue, we have another term which we call redeem, which refers to regaining position of something in exchange for payment, that is to redeem. And then another aspect we have, which will be important for our lesson, is the term convert, which refers to the changing of something. And then we also have the term cumulative, which refers to now increasing in quantity. Now, with that being said, let us go to a short break and we'll come back to focus on our main part of the lesson.